This is the Power Producers Podcast, where we are refining and redefining the sales game.
Rule number one is you have to believe in yourself. You're the only one who doesn't think you belong in this appointment. The prospect has already validated your existence by scheduling time with you. Get it through your head you belong here, go in there, crush it, and close the deal.
A place where sales professionals can come to learn from other sales professionals and thought leaders that have mastered their craft.
The difference between a good salesperson and a best-in-class salesperson is only 2 minutes. By spending an extra 2 minutes on what you might think is a mundane task in the sales game, you separate yourselves from the pack, you grow your book of business, you close more deals, and you retain your accounts.
As well as their peers who are still striving for perfection to achieve their why.
I have a wife and 4 kids. Failure is not an option.
Real sales professionals, real stories, real results.
It's no different than being a professional baseball player. You can't be a one-trick pony. You have to be a 5-tool player in order to succeed in this game.
This is the Power Producers Podcast, production redefined. Are you ready to feel the power?
Hey everybody, welcome to the Power Producers Podcast, where we are refining and redefining the sales game. Today, Kyle and I have Mr. Alex Toler from St. Louis, Missouri with us. What's up, Alex?
What's going on, guys?
What's happening?
Not much. Looks like your view's not that great, though, man. I mean, beautiful outside. You have a window? There you go. Okay.
Got
Nice.
that right there, so I can just kind of turn the head and look on out.
Yeah,
There you go.
look, unfortunately, that is like mermaids trying to entice me off the bow of a boat on a Friday afternoon when the weather looks like that.
Oh, it's gorgeous. It's been like San Diego weather this last week, and it's like it's one of those weird weeks of August where we get that really. It's going to be probably 100 degrees next week, but it's gorgeous.
San Diego. I had never been to San Diego. When I went out for innovation this year, it was a good time, man. It's interesting because I've heard people before refer to San Diego as like the Tampa of the West. It was interesting. Yeah. I had never heard anybody say that, and then everybody said it after I had been there. But
I feel like it's got to be better than Tampa.
I don't know, man. It was really weird because I checked into a hotel and went into my room, and I'm like looking out. And I'm like, this kind of feels like home. It was weird.
Just like landscape wise,
yeah.
Yeah.
You got the bay there, and it was kind of like being over there at maybe like Rocky Point or someplace like that in Tampa.
Yeah.
Is what it reminded me of. But Mexican food was far superior. Far.
Oh, I would imagine so.
And we were supposed to be in San Diego last week actually for a conference, and well, obviously that all got canceled or whatever else. But it was like a year in advance trip, and it was exciting because we were going to take a week prior to the conference to go actually enjoy it and see some family in Irvine and everything else.
Thanks, COVID.
Not traveling.
And I was hell-bent on going to Key West when they opened up the Keys again, and having gone down there and experienced the pure just delight of walking down Duval Street with a mask on 100% of the time, not happening again for me for a while.
Yeah.
It's like those idiots that put on those masks to run. The oxygen restriction masks.
Like the football players do it. Yeah.
That's what I felt like walking down Duval Street. I was trying to get to all of the places I wanted to go, and I was going to pass out from trying to breathe by the time I got there. It was crazy. Well, listen, Alex, good. We always ask everybody, I know a little bit of your backstory, but tell them kind of,
What's your deal?
Yeah, what's your deal, man? What led you into insurance?
Well, led me into insurance. All right. So I've kind of grew up knowing I wanted to work for myself. Parents, dad manages stores, and then mom is in sales. And so I was kind of exposed to business, both hardworking people, and was around a lot of their friends who were either in some form of sales or business owners, et cetera. And I saw that they had time was something that they had on their side all of the time. I didn't realize they were working in the background, but it was just like, why is that guy home at 2:00 on a Tuesday afternoon? It's because he has the ability to. And so was exposed to that. And then I guess it was 2010 was when I was leaving for school. And a good friend of mine had just graduated from the same college. I went to Missouri State University in Springfield, Missouri. And a good friend of mine had just graduated with a finance degree and couldn't find a job. Nobody was hiring finance degrees in 2010. And he was like, hey, I was going to go there for accounting was what I was going to declare as pretty much just to learn the numbers behind. I didn't want to go work for an accounting firm. I just wanted to learn more about accounting to transition to whatever type of business I wanted to get into later. And he was like, hey, you need to look into this risk management and insurance department they've got over here because everybody there has 4 job offers. had like 4 job offers apiece in 2010 coming out of school. And he's like, the rest of us in this finance department, most of us can't find a job, but these insurance guys all had opportunities. And so I was like, all right, I'll check out the program. And so I started in that program. And then while I was in school, I ended up underwriting for American National, doing personal lines underwriting. Probably the worst job you could ever have in the insurance business. Like houses that we would see today, I would look at, perfect risk. I was like nitpicking the hell out of it. Like, oh, there's not a handrail and 3 steps over here. So we're going to go ahead and send a cancellation letter out to the agent and the insured. They've got to like put this handrail out because you get 3 steps and everything else. And then there'd be these crap houses that would come through, but they would fit all of our underwriting guidelines and be like, all right, we're going to approve this one. And it's just like, okay, like I couldn't do it any longer.
The same agent got the declination and the approval. And he's like, who is this clown in the underwriting department? Would you stick a college kid back there?
Exactly what they did. Pay me $9 an hour. What more could you ask for? Like,
you could be a workers' comp auditor today if you're willing to work for $9 an hour.
Oh yeah, it was hilarious because I started thinking about it. I was like, I'm doing all this work of this underwriter, of these underwriters or whatever else, and like it was really efficient for them. But so I did that for a year and a half, and knew that underwriting was not what I wanted to do.
Yeah.
So I went and was an HR/risk management intern for a company called SRC Holdings out of Springfield, Missouri. Just did that for 3 months, but it's a major manufacturing firm. Has 12 or 13. I think they're like 13 facilities today. Most of them are in Springfield. And I was in their main corporate office with like 12 other people. And it was cool getting to go on the risk tours of the manufacturing facilities, kind of seeing how they did everything. They had a handful of their facilities were over 1 million hours since their last injury and different things like that. And so they ran a really tight ship and really good business. Jack Stack, the owner of SRC or the founder of SRC, he was one of the first to implement kind of open book management. And he's got a couple books on open book management. And he also was one of the first, like, wasn't a founder of the ESOP programs, but he's really excelled through having ESOP. And so it was cool seeing a business owner who showed his employee, he wanted his employees to know, hey, how is business going? He wanted the numbers to be out there where everybody knew if you were just some guy on the line that you're making an impact, because if you can get 70 of these units out a day and we're selling 70 of these units a day, like you're going to have a job next week type thing. Because he bought it in the 80s during all the big crisis of interest rate crisis and everything else of that nature. And so it was cool getting that 3-month experience. And while I was doing that, a buddy of mine was working for a State Farm agent, and they needed somebody to come cold call. So I started cold calling in the evenings for State Farm. And that parlayed into customer service, and then ultimately ended up doing sales for him for a year after I graduated, waiting for my now wife to graduate college. Kind of nice year. Got to spend an extra year in the college town and live with all my buddies and still work and get my feet wet in insurance.
I'm sorry. I just pictured you looking like Matthew McConaughey in Dazed and Confused when you said hanging out in the college town. You were already out of school, man. That's a line that's been drawn at that point.
So it was funny because
be a lot cooler if you did.
Love them redheads. Love them redheads. Thing about them high school girls, I keep getting older. They keep staying the same age. We just gave every line from the movie except for
every single
four
one.
good ones. And so anyway, it was funny in my class that I rushed with in the fraternity or whatever. I was one of 3 people that graduated within 4 years. And so all of my buddies were still down at school. And so it made for a fun year. It's like, I actually have a little bit of money now. If you didn't know, Springfield, Missouri is like the second cheapest place to live in the country.
Dude, if you had any money at all, you were like a millionaire to your college buddies with the job.
Oh, it was incredible. Like I could go like pick up like a $40 bar tab on a Friday night, and they're like, "Holy cow, like that's insane!"
You're a king.
Alex is rolling, popping bottles on Friday nights.
Oh yeah,
it's awesome.
I miss old Springfield, but anyways, I worked for that State Farm agent for a year and doing sales, and I quickly kind of realized that this isn't where I want to be. I mean, it's just chalk risk, and it was just churn and burn. Call as many personal lines people, write the policy, whatever else sticks. Try selling life insurance. Was not a fan of selling life insurance at 23 years old, and knew that I didn't want to do that. But I also noticed we started referring a bunch of business to independent agents for commercial work, and it's like that the money's there. And I had some people talking to me about becoming a State Farm agent or whatever, and I looked at the compensation structure, and then I realized that also you don't own your book of business. You're taking all the risk. You don't own the book of business. And, oh, by the way, in order to achieve certain levels of compensation, you got to sell a bunch of life, do a bunch of banking, et cetera. It's like, well, why can't I go on the other side where the guy's getting paid his 15% with zero quota and no other lines of business that you have to write? And so I ended up working for a friend of that State Farm agent. He let me sell for him as an independent when I moved back to St. Louis. Did that for about a year and a half. And I was referring a bunch of business to a buddy of mine because I kept losing some accounts off to carriers I didn't have. And so whenever I would get people would say, "Hey, we'd like you to quote our business," whatever else, I'd call my buddy up and be like, "Hey, I'm quoting this risk. They've given me approval. I'd like to give you the information as well." And we would just compare our carriers to each other, and he would present or I would present depending on who had the better proposal. And ultimately his boss called me and they're like, "Hey, why don't you come over to DeWitt where I'm at now?" And so I've been here with DeWitt just over right at 4 years, and things are good on the book of business. Ended up buying my buddy out 2 years in, and things are proceeding well. And it's a great situation to have a lot of carrier access. Pay is really very high commission structure, and there's nobody telling you what to do, what to write, et cetera. So I get to go after what type of business I want to write. And if I don't feel like selling stuff for a month, I don't have to sell stuff for a month because there's nobody breathing down my neck. It's you eat what you kill. So that's my insurance story. So I'm one of the few that's been in it since pretty much day one.
Dude, like you literally have done everything in insurance except for maybe adjust claims as far as I can tell. And I'm sitting here thinking to myself, I'm like, wow, Alex really has a lot of experience in working for as young as he is. And then I remembered we interviewed Ryan Keating.
Oh, dude.
who is like the Forrest Gump of the insurance world, because this guy has literally done everything. It's crazy. Yeah. He's a good dude, man. I like Ryan a lot, but we were busting his chops when he was on because he just kept going. Like this guy, he probably worked 15 places before he got into insurance.
Yeah, at least.
It's crazy. I work for my dad has run car washes pretty much. I'm a third generation. I could be a third generation car washer if I wanted to. And so I worked in the car wash business all through high school and early on in college, just drying cars and vacuuming cars out or whatever, and worked for my dad. And I think that's where a lot of my kind of like work ethic and things come from as well, is just and customer service ability, I think, came from that. It's
sure.
You knew what people wanted a clean car. They expected it done quickly and they wanted a clean car, and then you had to talk to them or whatever else. And that was one of the few times where the customer was always, because it's like, okay, hey, you missed a spot here or whatever. Can you dry it off for me? And if you listened to them, they paid you more. They tipped you more. And
right.
So that was enjoyable business to be in.
They hate taking the antennas off, though. I can tell you that.
Oh yeah.
They hate taking the antennas off to keep them from getting damaged. There's a million disclaimers, but they hate to. Now we don't have that issue anymore. Do they even put antennas on cars? I think they're built into the glass.
They're like
little dorsal fin on the back.
Yeah, exactly.
Yeah, it's like a little fin and everything else. And I think now like they've got the car washes, they've got all the signs now that say pretty much like, if your car's over 10 years old and anything happens to it here,
sorry, dude.
You're sorry. You're on the hook.
We have these places down here that have like a monthly subscription for like $30 or $40. And it's a 3-minute car wash. And then you pull around and you vacuum it out and everything. And
Dude.
To me, it's worth it. Like I hit that thing once or twice a week. Well, when I have my car, I could go into that story if we wanted to, but I just save everybody.
I just thought of a car wash story that I had. So the last vehicle that I had when I first got it, I had it for like, I don't know, maybe like a week and a half or two. I'm like, all right, I need to, get this bad boy rinsed. So I hit this car wash up on the way back to my office. These are the Quill days. So I'm sitting in there waiting for, it was one where you give them the keys and they drive it through the, like the automated thing and dry it off, do whatever else you want done to it. So I'm sitting in there and it's been like longer than I would think that this would take. And after a while, a guy walks in and he's like, hey, is yours the white Sonata? I'm like, yeah, that's me. He's like, sorry, sir, but we popped one of the tires. I'm like,
no.
I'm like, what? I thought he was joking at first. Like, oh, okay, cool, man. How much I owe you? And so he's like, yeah. And then he continues like, I don't know how this has never happened before. I'm like, oh shit, you're serious. So I go outside and sure enough, it's on the ground. I'm like, what the hell happened, man? He's like, they were just driving in and they hit the ramp the wrong way and it just popped. I've never seen it before. I'm like, yeah, me either,
like driving 50?
That's what I'm saying. I'm like, how fast were you going? And so
it's like your wife handling the dog gate.
So I'm like, whoa, okay. He's like, well, let's go to Walmart. I'll get you a new tire. I'm like, all right. So I jump in the owner's like van or whatever he had, and we're cruising to Walmart. Get to Walmart. They don't have the same tires that I have. He's like, all right, well, I'll get you this one. I go, no, bro. I'm not having one weird tire and 3 of the normal tires. And so
it'd be so much cooler if you did.
So I hit up this place that was like down the street. This was in Oldsmar, so I'm familiar with the area. I grew up there, and so I hit up this shop and get in there, and the guy's like, "We don't have any on hand. I'd have to call this dealership and have it sent." And
how is that not a standard size tire?
It wasn't the size; it was the brand. They were just Kumo tires. It wasn't anything crazy. Like they were just, but I wanted all the same ones. So this guy starts getting pissy with me, the owner of this business. Inside of the new shop, and he's like, yelling at me like he was, I don't remember where he was from, but English was not his first language, and I lost my shit. Like I flipped out on him in this other person's business, and they had customers in there, and I'm like, so I left. I'm like outside. I'm like, dude, I hit
number one, how were you getting back to the car wash if you rode with the guy that you were going off on?
I didn't leave. I went outside. I was pissed. I hit up the big cat. I'm like, dude, you'll never believe, but this is what I'm dealing with right now. And then so I went back in the business, and I apologized to the owner of that business. I'm like, look, man, sorry, but like this guy just really pissed me off. Like I'm not taking some random tire. He's like, I totally get it. Like, no worries.
And by the way, do you happen to sell copy paper? Because I'm in need.
Yeah, you want some
dude. So yeah, I'll wrap this up. But I get back in the car with the owner, and we're driving back, and I'm fuming, and I'm like, look, man, I'm going to need to get this in writing that you're going to get this fixed. So we get back to his place, and I had to go to this other dealership to get it fixed. And he ultimately ended up paying for it, but whew, I was hot.
That's when I wish that I could port my little brother from 3rd grade in and just whack him in the shins as hard as
just kick him right in the shins. He was so fat too. He would have fallen over.
My all-time favorite. So now we're going to go into tire stories, huh? This is a good one, and I'll make it very quick. I just had a buddy in college whose theory on tires was that they were a disposable item. He was literally driving on 4 Space Saver spares, and when one of them went out, he'd just go down to the tire place and buy another one for like $15 or $20 and bolt it on. He was literally driving around town with the 4 skinny tires on his car, literally for the 2.5 years I was there.
I've never heard of someone taking that approach. Like, who thinks that?
I don't know. He runs a very successful financial planning practice today. So it maybe has something to do with it. But anyhow, so listen, talk a little bit, Alex. I mean, the situation you're in, you touched on it, but it's a little bit unique in that you own your book, right? But you don't own the agency.
Correct.
You know, on how that's set up. And I'm sure there's plenty other people who listen to the podcast that either do that or have considered or are considering doing something that like that. You know, obviously we don't need financial details or things like that, but just talk a little bit about the relationship and how that works in ownership and all of that.
No, yeah. And so actually it's the way we're set up. I've talked to some other guys out of town. St. Louis market, there's a handful of agencies big agencies too, who are set up with a similar practice.
Well, yeah, because I talked to, what's that guy's name? Brian Reisinger.
Yeah.
He's working at somebody else.
He's a Crane, and there are 100+ agents who are all set up the same way.
And he was saying it was the same thing as what I got. Yeah, that's what I got. Uh-huh. Okay.
And so what we have here is agency gets all the contracts. So I've got every carrier under the sun minus 2 or 3 that you'd like to write. Availability. They provide our management system. So we're Applied is our management system. So that's set up for us. All of our back end accounting. So anytime commission reports, anything like that comes in, they take care of all of that. We do our own billings, but then they actually, we bill it into the system, and they reconcile all the reports, and then send out our commission statement, things of that nature, daily download, things of that nature. They take care of all of that and send us an email in the morning of here's everything that came through last night that's downloaded into the system. And so, they take care of a ton of back end support for us to really where it sets us up to where we can grow and build our own teams inside of the agency. And it's you have your contracts are there. So I think it's one of the biggest things that you don't have to worry about contracts getting canceled on you for lack of volume with a particular carrier. It's a good and a bad thing, because it's like, hey, like I've got so much broadband of what I can and can't write. Like you get these little one-off type things or whatever else. And it's like, oh yeah, I have a carrier that can do that. And so you kind of find yourself like a gun club. I just had come across my desk or whatever. It's a couple $1,000 revenue account. And it's like, oh yeah, we've actually got an admitted market that will write that. But I'm not going to be going out after a ton of gun clubs, but I know we have a market, so I'll actually spend the time on it. And sometimes it takes you away from going after what our focus business is, but it's a really good setup relationship. The commission splits are I won't give a number, but the commission splits are very high, and we own our book 100% to where we can sell it. I'm actually getting ready to enter into a contract with another one of our agents to purchase his book here in 2023. Like he's setting up his.
That's planning ahead of time.
Oh yeah. But the whole idea is that I'm actually going to end up moving into his office, and we're going to work on a deal. Cause he's like, I don't have time to cross sell. He's 65 years old. He's like, I don't have time to cross sell. He's got people he's wrote for 15 years that he still doesn't write. He's $150,000 policy, but he still doesn't write the work comp for him 15 years later. He's like, I just haven't taken the time to cross sell it. Like, might as well put it in your lap for you to go write that.
It's crazy.
And then all the leads that he's got coming in, we're going to work something out as well. And so it's nice that we've got this group that, one, we can lean on for questions, but 2, when it's time to, like, if I want to exit the business in 5 years, there's somebody within the group that will pay me a fair market value for my book of business, and I can walk away.
So is that something contractually that when you signed up with them that they basically had it lined out that DeWitt or another agent inside of DeWitt would have first right of refusal on your book if you chose to sell it?
Ironically, I really don't know if that's in my contract or not. It's where I would go and at least look for a fair offer. And one of the good things about us is there's 12 or 13 agents within the group, and everything's fair. I don't know if there's necessarily not compete, but if I wanted to walk, I could take my book and leave 30-day notice, because it's one of those things. If you don't want to be here, we don't want you here. We don't want to put the handcuffs on you, because we want the relationship to be beneficial to both sides, and don't want to create any animosity, things of that nature, where people are mad at each other, or you just have friction with the management group. And so we can leave if we want to, but and that's why I think I enjoy being here, is because there's we are all on the same page, and everything was kind of leveled up front. I mean, the 3 rules here: don't cheat, don't steal, don't lie. And if you don't do those 3 things, you're going to be taken care of. And so I don't know if I even have the ability to sell outside of the group or not, but I know there's plenty of people here that would pay me what is fair market value on a book of business.
Do you have the ability to participate in profit sharing and all of that stuff?
We don't do profit sharing. So that's one thing I don't get to participate in. I think 1 or 2 of the bigger agencies in town have, like, if you have to have substantial revenue. I'm thinking maybe north of 7 figures before, high 6-figure revenue before they'll let you participate in profit share. And I guess the kicker for a lot of them is I know that they're capped a little bit less than we are on what our commission split is. I guess one of the good things that we do have, though, is that our buying power, we get higher commission for some carriers and things of that nature. That helps out as well.
Well, yeah, but the other thing, too, is, I mean, you're still getting a percentage of the revenue that flows, so it makes perfect sense. I mean, I don't think that you have a bad deal that you can't have profit sharing. They need to make profit somewhere, and if they're paying you high splits and doing everything that they said they would do for you, it doesn't sound like too raw of a deal to me at all. I mean, it sounds like it's a good deal. And even if they do get profit sharing, that's not something that's guaranteed. They're still taking a gamble that they're going to be able to manage the book and hit contingency to the level that it'll increase that spread between what's been brought in and what they've paid out. So
I've done the math on it, and it's just like, it's I'm sure they're working on some slimmer margins. They are working on slimmer margins on the top, and so, I mean, it works out well. There's really good people in the organization. I actually work out of the corporate office. There's 3 of us here, 2, like a CFO, a staff accountant, and then myself. And president, actually, he is in one of our other offices. And our CEO actually lives down there in Tampa. So,
oh, interesting.
It's pretty funny.
Well, that's a good setup, though. I mean, I think it goes to show, there's no real answer for the best way to run an agency, right? Because I think my way's the best, and it may be the best for me, but they've obviously figured out, a way to do it that serves them better. I probably wouldn't do that, but doesn't mean it's not right. And that's the whole thing. I mean, that's what I think that our industry gets bogged down sometimes with people getting in pissing matches about who's ways the correct way, when at the end of the day, they're both correct. It's just a matter of what works for you.
As my dad's always said, there's more than one way to skin a cat. Like, it's just how you want to go about it. And you see people complain or argue about, oh, here's how we're going to do pay. And it's like, I know what your structure is and everything else. And it's like, okay, it's because David's looked at the numbers from this regard, but somebody else is looking at the numbers from a different way. I think at the end of the day, as long as you're profitable, isn't it the goal of business, is to be profitable?
That's why I don't understand why these people take so much time arguing about stuff like that, because that's definitely not profitable.
Like, if I wanted to only have like a $200,000 revenue book where I have minimal maintenance and I can clear 150 a year, or I have $1 million book, I understand the balance sheet aspect of things and what you can sell for down the road. But as far as day-to-day headaches of, okay, I've got $1 million, $2 million worth of revenue, but I've got people I've got to manage now on top of it. It's one of some of those things that you got to weigh sometimes. It's like, do you want these headaches, or do you want something that you can manage yourself with one person?
Right.
It all comes down to what your preference is. I personally want to grow a book and grow a staff and things of that nature. But I can see where others might only want to write enough business. I mean, hell, you could have $10,000 revenue accounts and maybe have one account manager helping you out. You're doing just fine.
Yep.
You're not going to get that sale value, but I mean, you can save for retirement in different ways as well. And if you have 30 accounts, there's plenty of free time for you to still go out and do things that you enjoy. I look at it from multi aspects. And I think, the insurance business, it allows us a lot of time freedom. It's
definitely.
Office phone rings to my cell phone. So
same.
I'm actually going to be in the office a little late on a Friday, but we're going to the lake this weekend, And
Yeah, exactly. But then, I mean, then there's times where you get in a little bit late too. I mean, it's the same thing. I mean, we don't. There's times where I'm sitting here working on deals at 8 p.m. on a Thursday, Friday, whatever day it is, and that's just kind of, that's what you sign up for if you're doing it right. You can have that balance, and that, you're not. You don't have to be the person that shows up every single day at 7 and is working till whatever time. Like, you show up, you get your stuff done, and you help out your clients when they need help. It's, they kind of dictate things.
Oh, certainly. And I think that's the thing is like, I see myself some days, like just not sitting here, but it's like, okay, you cold call or whatever else, but then you got like a little 2 hours, like downtime after you're done with like your prospecting for the day, you're done with your activities. It's like, I can leave, but then ultimately somebody's going to call you at 4:30, 4:45. Like, hey,
oh yeah, it always happens.
And it's all good. But I mean, my first phone call was 7 a.m. Second largest client in my book of business was calling me, and
got to answer.
Then you got to answer. He's a contractor. Guy gets up at 4 a.m. every day.
Right. There's obviously a reason he's calling. I mean, he's not going to, especially if he's your second biggest client or whatever. But I also find that a lot of times where the downtime is I'm sitting, I'm waiting on getting stuff back. Like I'm waiting on hearing, back from an underwriter, or I'm waiting on getting a piece of information from the insured or a prospect to get to underwriting. So, I mean, that plays a role in some of the downtime too. But I am interested if there was anything that you learned while you were doing the underwriting for the personal line stuff that you have been able to apply, as a producer.
I would say, I guess from the underwriting side, what I learned, go after clean risks. I think as an agent, we do need to be underwriting, even if it's a home and auto, we need some semblance of upfront. I mean, that's part of the reason why we're getting paid by the carrier. It's sure in business, but it's also to do a little bit of upfront underwriting. And I mean, there were definitely times where there was just blatant, like, how the heck, like, because American National required the agents to submit photos too of the houses. And so there were times where they'd be taking photos and it was just like blatant stuff that was against the underwriting guidelines. And they were also a captive. And so it's not like the agent didn't understand what the underwriting guidelines were. And so for me, it was a matter of like getting to know what kind of risk you're getting into. I mean, if anything, at least pull a thing up on Google Street View. You should be able to get a picture of it within the last 2 years and just give you an idea of what you're getting yourself into. Google Earth can pretty much give you what the roof looks like from within the last 6 months.
Right.
Get an idea. And so that was the biggest thing. I only did the homeowners. I never underwrote the auto side. I left there before they trained me on that. That seems even more miserable than the homeowners. Looking at MVRs all day.
Right.
So, honestly, what I learned the most was I was in school for risk management and insurance. That degree was heavily commercial. We had like a personal lines, like 2 weeks on personal lines insurance, and then it was a lot of it was CPCU type courses that we were going through in school, and I pretty much blew them off because I'm like, everything I'm learning in this class doesn't apply. These classes is not applying to what I'm doing I'm working in the industry.
Right.
It doesn't apply. And then here I go get my CIC and I'm like, damn, I really wish I would have paid attention more while I was in college. It's because I've got my college textbook still sitting here, but I mean, the commercial casualty class that they taught, all the different courses they taught on the commercial side of things, a lot of the risk transfer type stuff they were really trying to groom you to go be a risk manager for Fortune 500 is really what the degree was, I think, supposed to get you to do. Or a lot of students go work for like your Locked-ins and your Aons of the world afterwards, and some sort of account management type role is what they were really grooming for you. So more so anything when I was in that underwriting role, I learned that if you're learning other stuff, pay attention to it because you're going to eventually one day need to use that information.
You know what I learned? I learned there's a lot of people that don't have any problem at all signing the back of a paycheck, but you got to go get your rear end kicked on the street and learn it for yourself if you want to be the one to sign the front of a paycheck.
Oh, 100%. I mean, I've had I had a very large trucking company that I wrote, and it was like $25,000 annual revenue, everything else of that nature. I mean, it was very disproportionate to the rest of my book at the time, and they actually got canceled midterm for material misrepresentation. So I got like a $13,000 chargeback 1 month. I owed them. I'm like, freaking out because my wife was literally quitting her job to go back to school this very month, or she'd started school like 2 weeks prior. This cancellation goes through. I'm getting a charge back on it of like 13 grand. So that's wasn't even going to cover that month's deposit from the agency. And I'm like, great, I owe them money. Wife's not working. We saved a bunch before she went back or whatever. It was probably the scariest, worst day I've had in the business. And then I got home and she's like, hey, it's fine. That's why we saved for the last 3 years, knowing I was going back to school.
Let's party. All right.
And honestly, it also taught me, hey, don't rely on this one account. Like if you're going to write big commercial, you need to go write a lot more. And even one of the things I'm working on right now is I was going through, until I get somebody in the office, I'm still trying to write a little bit of personal lines because it just kind of keeps that cash flow coming in for us. It does take me away from what I really want to write in that 10 or say $5,000 to $20,000 revenue range is what I'm really going after. But right, line just kind of keeps the lights on, keeps that cash flow coming in to help if one of these clients does cancel on me, I at least have some fallback there. Is what I'm learning.
Yeah, what I learned very, very early on, and it's because I got burnt similarly, is how much I really don't like having to deal with E&S business with minimum earned premiums and all of that stuff. It only takes one chargeback to learn that lesson. It's crazy, man. I got hit hard for that same reason.
I think everybody kind of needs to have that one because I think it helps you understand what you're doing in the business. And I've got a handful of small trucking accounts that I do write still to this day or whatever else, but it's not what I'm going after, not what I want to write. But I was in an office and there was literally this startup trucking company was down the hall from me. And they came to me one day with their deck page. They're like, hey, see what you can do. And then all of a sudden they just took off and just grew. And then they ended up getting material misrepresentation because they were, I think they were struggling financially. And they removed 2 vehicles from the policy, telling me that, hey, these guys are no longer driving for us. We don't have the vehicles anymore.
But they were.
Oh, there was a DOT inspection down in Florida or whatever else. And the license plate on the trailer matched the license plate registered to the carrier. And so it's just like, yep, can't hide this one. And
no, I mean, and that's a heavily regulated industry anyhow. I mean, I'm sure there's plenty of shady truckers out there, just like there are shady contractors, right? But
100%.
I can't imagine trying to pull something over on such a heavily regulated industry. It's just nuts. You could get pulled over at literally any time.
For any hell, you got to go through a weigh station, and they will do a quick inspection damn near every time you go to the weigh station. But it's absolutely crazy. That's one business I'm happy I'm not having more in it, because I mean the premiums in that class are just going insane on the commercial auto, and there's only a handful of people writing that trucking stuff right now. It's like who is going to? I'm not going to say everybody's going to misrepresent on something, but a trucker is going to likely take the lowest premium offered to him and not second guess whether or not the agent fully put the right stuff onto a policy. Right. It's just an unscrupulous business. And it's because I'll get Progressive quotes back from people that I've quoted on trucking. And I'm like, hey, I already ran you with Progressive. I'm like $4,000 more a year. And there's some things you can do within it that are completely legal, but it's just like your garaging address is completely wrong, because a lot of our trucking companies are based out of like downtown St. Louis and like North Side or whatever, which is a big industrial area, but it's also a high crime area. And so those guys will then try having their garaging address out from where I'm from, 45 miles west of downtown in nice suburban area, to where the cost completely changes. But it's like your registration shows that your truck is stored here. Like you have to have it here. And that's usually what I find is a lot of people are just trying to get the best of both worlds, be close to the warehouses to pick their loads up, but they want the garaging address out where they're going to get the best rate.
Yeah, it's crazy, man. It's tough, because you never know when people are being completely honest with you or not. And obviously, you can't sit there and call them out. No. But, you get burnt a couple of times. You learn pretty quick, and you learn what to stay away from. I'm interested in, I know Kyle asked you what you learned, going through the various roles that you had prior, but I'm interested in what you use today that you took from that experience. Like, how does that experience help you doing what you're doing today, knowing that it's not a direct translation?
I would say, I mean, I would start with over at the manufacturer that I work for, or whatever else. It showed me kind of how to communicate with my clients. And there's a local contractor that I know well here that's built a very large business. And I've noticed, and it's when people try to skimp on stuff with me, you're like, oh my gosh, that work comp premium's so high in these like carpentry class codes and different things of that nature. Like, I can't afford this or whatever else. I don't have the money for it. It's like, well, the biggest guy in town, he started with 2 people. The biggest manufacturer in town started with a couple hundred people. And they grew even more because they did stuff the right way from the beginning. They took it on the chin for a while on what they were paying. But now the biggest drywall company in St. Louis, guy's got like a 0.48 mod, just went over $1 million out. I don't write the account. I know the guy very well. A good friend of his actually is the one who writes the account.
You need us to fly up there and take him out?
The friend?
Yeah.
I think the friend's retiring here in a couple of years, so we'll be able to go after. They got like a 0.48 mod.
0.48 is strong.
Yeah, but they just went over 1 million hours of no injuries in a drywall classification. Like, incredible. But
let's hope those occupational disease claims from the dust don't come in, a couple years down the road. Or that's
why would you even say something like that?
It's
not Alex's client.
True. Could be in a couple of years though.
Well, then the premium will be higher, and you'll be thanking me for the increase in commissions.
Well, thank you. But anyway,
is that your version of like a rain dance?
Yeah, just watch my voodoo magic that I work from my desk here.
I guess to look back to what I learned, that like, hey, like these people have done it right, and so that's why I'm telling some, because a lot of his employees or other people from some of these other bigger, they're like, oh, I can go start my own drywall contractor. Well, their premiums, like their cost per 100 is like double or triple because there's only 2 or 3 carriers who are going to write that class for a non-established business. They have no mod, and nobody wants to offer them credit on their account, and so they're taking it on the chin for a while. And I'm like, guys, if you do it the right way, I promise you, in a couple of years, it's going to come around. I've got 2 accounts right now that one saw his work comp premium get cut in half last year because he's done it right the last 2 years. And now another carrier offered him, like, hey, we'll take you on with a much lower rate. And now he's reaping the benefits. He's like, that's an extra $50,000 a year in my pocket.
There you go.
I was already getting the work to begin with. Like I've now created an extra $50,000, and you can go buy vehicles, things of that nature. And it's that slow build. And so I learned a lot from these companies that have done things the right way and built these great cultures, that if you build the culture and you, once again, don't skimp on your accounting, don't try hiding things from the insurance carriers, everything's going to work out for you better in the end. If you want to be that big business, and even if you want to stay a small business, it's going to work out better for you.
I tell people all the time, man, don't waste, don't skimp money on legal, accounting, or insurance. Those are the 3 core functions of your business for all practical purposes. And
it's funny because that's where a lot of people try to.
It's where they try and skim. It's where they try and skim the money from it. And the thing is, look, you might pay $500 an hour for the best attorney in town or a really good attorney in town, and it's going to hurt. But if you were to go get the $200 attorney, you're going to end up spending way more money because they can't fix the problem that you have the way that the $500 an hour attorney can. Mm-hmm. That person gets $500 an hour because they get results. And it's funny we're even talking about this because I do my content every morning. First thing I do when I come in is I shoot my videos. I did 3 of them this morning. And the one video that I did this morning is, why are you hiding your commissions from your clients? Because I was in a forum last night.
I saw it. Josh, great comment.
Yeah, somebody's in there complaining about it. And it was funny because the first thing is, listen, people, listen to what I'm saying right now. Stop, put the gum down. You don't need to take your piece of gum out of your ashtray yet and start chewing it. Let's listen to David. Number one, I love talking to people about how much I get paid. I want them to understand that I earn that. And I know that I earn that. And there's no doubt that I earn that. So why would I not tell them what they're paying me? I mean, that's just ridiculous. And you see all of these creatures of the night come out of the shadows that are apparently all commissions hiders and are saying, oh, no, don't tell them. They're going to want a piece of the action. They're going to want this. They're going to want that. The one person that made a comment in there, aside from Josh, that I respected is actually somebody who made a comment similar to something that I say or have said in the past when people ask me about my commissions. And that is, we get a portion of 10 to 15% of what we write, right? We don't get, I mean, as the agency, you would get the whole 15, but as the producer, you don't. If you have a really good server in a restaurant, what do you tip them?
20, 25, easily 25%.
Exactly. And all they're doing is keeping your beer full and cold and the bottomless fries full. Like, this is somebody who's managing the protection of your most important asset, and you're going to nickel and dime them to get them less of a percentage of the sale than what the average server makes. Look, I'm not throwing off on servers. I have all the respect in the world for them, but I don't want a server coming in and structuring my risk management plan any more than you want me putting on a Hooters uniform and giving you wings and bottomless beers. It's just not going to happen. And you guys can laugh out loud. It's fine.
I'm laughing too damn hard right now.
That's just not something I needed to visualize on a Friday afternoon, bro.
You'll have it within a week, peering from behind the palms on the side of my pool like the Florida skunk ape in a Hooters uniform. It's coming.
Oh my God.
But I mean, it's ridiculous to me. And so, I've really been thinking about this, and I'm like, you know what? I'm going to ruffle a few feathers and put some content out around disclosing commissions and around fee versus commissions and some other things. So I had some pretty decent ideas and put some good content out this morning. My number one reaction, if you don't want to tell somebody what you make that is paying you, like if you don't want your client to know what you're getting paid to represent them, you probably aren't delivering any kind of service or value to them. Because if you were, you wouldn't have any problem telling them. You'd be proud of what you do for them and what you earn for doing it. If you think that they are going to hear that number and be like, oh my gosh, I can't believe I'm paying you that much, then you need to do more.
Well, I'm thinking, okay, maybe a commercial property type thing where you're just writing a bunch of LROs or whatever else, and you make $30,000 because somebody's got $200,000 in annual premium. That guy might be wondering why you're making $30,000 for just entering in some property quotes, or you helping him with contract mitigation, things of that nature. So it makes sense there. But on some of these contractors and things of that nature, they'd probably be shocked at how little we make sometimes on their account.
Yeah. Well, I mean, and that's the whole thing. That's what I challenged people in the video and blog that's coming out is think about your compensation and how you want it. Like, I prefer to work on a service fee. I don't want commission, because if I have commission, I'm tying my compensation to the sale of a product. If I have a service fee, I'm tying my compensation to being a trusted advisor and a problem solver. I'd much rather do that. What's that?
And your ability to perform.
Correct. Yeah. I mean, and you know my shtick, right? I can offer two different options, a flat fee or one with some gain share in it. But it cracks me up. And the other thing is, as an agency owner, I like the service fee because I can plan my cash flow. If I want to bill them monthly, I can bill them monthly. If I want to bill them quarterly, I can bill them quarterly. And I'm not having to wait on that delay that's created when money has to flow through a carrier and then subsequently come back out to you. But, the other thing is, we gripe and we moan about wanting to be treated as a trusted advisor, like a doctor, or not a doctor, but like an attorney, like a CPA. Yeah, I work for a doctor for that matter. Those guys don't work on commission. None of them do. So if you want to be,
they'll nickel and dime your ass for every hour too. It's
like
we spent 6 minutes on the phone. I'm going to go ahead and put that down as 1/10 of an hour, and here's your $25 bill.
Yeah, no kidding. And the thing is, if we want to be treated like them, here's a newsflash, industry: start acting like them. It's not difficult. If you want to be treated like them, give the kind of advice they give relative to your occupation, not theirs. Bill the way they bill. I mean, it's not rocket science to figure out how it works. It's not an easy conversation to have initially because most people have to have a mind shift in order to make that work. But at the end of the day, if you have that conversation and you're dealing with an astute buyer, they would prefer to pay you a fee. Now you can go in and anything that you recommend to that prospect or that client is taken at a much more serious level because they're not second guessing if you're trying to sell them something so that you can make more money. It's something that they really need. The other thing is, and I don't think that a lot of people think through this because I know in the middle market, not many places even offer fee for service as a model, but I talk about this in the post that I'm going to release, and that will have come out before this podcast does. But if you think about it this way, say I go into an account that's got a $700,000, has $700,000 in premium and has horrible losses, and that's why the rate is where it is. And I decide, you know what, I'm not going to pile on. You're already paying more than you need to be paying for insurance because of loss performance. I'm going to bill you out at $50,000 a year. Here's what you're going to get for it, which is much less than 15% or even 10% for that matter, right? But if I go in and I do the things that I need to do to get that account cleaned up and that premium subsequently drops when the person's now paying $350,000 in premium, I've got a baseline established that my fee is $50,000. And I can go in and I can make the argument that, look, we've cut your premiums in half. My fee really needs to be 70 or 75 going forward. You've taken the chance to prove yourself, but then you do prove yourself. What are they going to do? Say no? You just saved them $350,000. You're not even asking for 10% of what you saved them. And so you actually make more money when the account is performing the way that it should. And it's not a difficult conversation to have with your client because that's how the compensation model should be. We shouldn't have agents out there doing nothing, letting experienced mods blow up, have the premiums go through the roof, and then they get a raise because they didn't do anything. Get yourself focus on driving premiums down, drive losses down, and build a compensation model for yourself that's going to allow you to make more money when that client pays less. Novel concept, people. And that's why I like to do it. I understand that I'm taking a little bit of a haircut on the front end, but I'm buying loyalty from that client or that prospect. They're realizing, and I explained to them, look, I should be making X amount of dollars in revenue, but I understand that you're going through this and I'm willing to contribute to that. My service fee is going to be this, which will save you some money and some pain. When we get things down, then we're going to talk about how I get a raise. Address it on the front end. Like, right.
I think that's the important part in it is doing it on the front end, setting those expectations early in the process.
Look, Kyle and I had an account, and look, it can be negotiated too, but we had an account where we projected what we were going to save them in terms of going back and recovering money from a botched audit. It wasn't even a botched audit. It was a non-participatory audit because they had horrible representation who told them that they were growing at such a rate they should just go ahead and ignore the audit because the penalty for non-compliance would be less than the actual audit itself because they would have ended up paying triple. And we ran the numbers and I'm like, that's just not true. This person got a massive raise and you paid way more premium than you should. We'll engage with you and we'll get money back, but we're going to request that since we don't handle the coverage now and we're not getting paid anything, we'll just split any found money with you 50-50. Mm-hmm. Well, they came back and said, we're not interested in 50-50. We'll let you have 30% and we'll take 70. I'm like, all right, I'm good with that. Whatever. Right. Well, guess what? They didn't realize exactly how much was on the table. And we basically recovered almost $1.3 million for that. So we were billing out at 30% of $1.3 million for what amounted to roughly 2 to 3 hours of my time.
Right.
But at the same time, we negotiated the deal. They're the ones who named that price. And the fact of the matter is they still got like $800,000 they didn't have before we did that work. So why should they care that we got 400?
They shouldn't.
Right.
It's kind of like an attorney with once again, look what attorneys will take. hey, I can go get you $100,000 from this car accident. Well, they're going to take 30-40% of it anyway.
Right. But I don't think agents think
giving them that money.
Yeah, I don't think, and this is the difference, again, going into the mindset of being an insurance salesperson versus being a trusted advisor or a risk manager or whatever you want to brand yourself. If you're going to shift the way you think and you're going to move into middle market and you're going to try and change the way you're perceived and the way the industry does business, you have to figure out creative ways to structure your compensation. I'm not saying you give away the farm, but if you can, the further you can separate yourself from commission, the higher you're going to close. Ultimately, the more money you're going to make, and you're going to your retention is going to be through the roof because your competitors aren't thinking that way.
Mm-hmm.
I can tell you, my favorite deal is to go in with somebody who's with a super regional or a national brokerage, and they're taking commissions on accounts, and I know that I can fee it. And I can fee it for less than what the commissions are because it's not going to require a bunch of heavy lifting on our end. And then I'll just ride that out. And as the premium drops, I'll talk about what kind of an increase I get in my fee for helping get the premiums down. And that's the whole thing. You're bringing down premiums by tens of thousands of dollars, but they're only paying you a small percentage of what that would be in terms of flat dollars on a fee. I don't know, man. Works for me.
Sounds like works great. I haven't got to the completely into the feed. I feed a few accounts on some E&S stuff where it's just
well, you probably have to be careful too because I don't know that you have the ability to make those decisions directly, right? Because you start getting into service feeing accounts and netting out fees. And I'm giving this is almost like advice to you as opposed to the podcast at this point. But if you get into that, you really need to make sure you're talking to the people upstairs about it because it'll affect when you bring the premium down, that affects their ability to hit their contingencies and all of the other things. And some people don't like that.
Makes perfect sense. Definitely something to consider. I know from, at least on our end, if we fee E&S type business or whatever else, just because we know it's going to be high service, whatever else, we still run the fee through. We run the fee through the agent. We bill it into the system to where it's known that, hey, we just charged a $500 fee for this person's account, and then they still get their split and everything else of that nature.
What I've been successful doing is I've actually gone to the carrier and gotten the carrier to give me the credit on my production as if I wrote it with the commission in, but bill it without the commission out. So I got the best of both worlds.
Yeah, because they didn't have to pay you.
Right.
Makes sense on both ends. Why
it helps with volume. Yeah, it helps with volume commitments, and it helps with making sure you hit your contingency numbers.
Cool. Yeah, it's there's a lot of ways we can think about stuff. I think piece of advice I would give people is we're talking about attorneys and accountants and whatnot, especially all of us in the insurance space. We should all have good relationships with our attorney and our accountant. I mean, I went and drank beers with mine last week. It's something that we were doing on a monthly basis prior of just a kind of get an idea what's going on in their industries as well. But you have that good relationship to where I can pick up the phone and call my accountant. I can pick up the phone and call my attorney and ask them a question about my stuff. But I'm also sending them a little bit of business as well. And we all work in conjunction. Today we're closed on a veterinary clinic today. 3 of us are all in on the deal because we've made it easy on the person. The attorney gets paid this year on the transactional cost. The accountant's going to get paid annually for managing the stuff, and we'll get paid annually. Then we'll go find more people who are selling clinics and different things of that nature, and just kind of keeping it going. But it helps with keeping our businesses in line. It helps with them, giving them ideas of what we see going on in our marketplace. And like, hey, for my accountant, I'm like, hey, what does their work comp cost look like in relation to the revenue on the business or in relation to payroll? If it's over a certain percentage or looks like this, like tell them they need to sit down with me. And he's been able to send some stuff over as well.
I'll tell you right now, man, if you want to make an accountant look like a superstar, offer to do a mod analysis for everybody in that accountant's book of business. Say, look, we're finding X percentage of dollars for all these people. If you want some found money for your book, 65% of these mods are wrong when they come out. I'm not going to pressure them into selling. As a courtesy to you, I will happily review these on a complimentary basis and present the findings. And if they choose to do business with me, that's great. If not, I'm doing it as a service to you for your clients. Watch how much of that you close.
You'll close a huge amount of that. We do that for the attorney. He offers he'll do a quick contract review, but he'll ask you for documents that you were talking the other day about buy-sell agreements on the podcast I just released the other day with the life insurance guy. One of the things that he'll ask these people is like, hey, what about your buy-sell agreement? Most of them don't have that in place. So he's doing a free review, but on the list of 10 documents or stuff that he needs, they can't even produce half of them. And it's then, okay, why do I need these documents? And he's able to explain it, and it ends up tying back into the insurance policy a lot of times too, of you need these documents to be compliant with your insurance policy. And so I think those are two great places to have good relationships with people. And you can all share plenty of business and do right by people. And I think offering free analysis, as you've mentioned, I think so many people are afraid to do a little bit of free work and think they're like, oh, this person's just going to use me. I think you frame it right up front. They're going to be appreciative of it. And it's, you know what, I'm doing a favor to my accountant. And if I land and close a couple of those pieces of business, that's stuff I've never even would have gotten in front of before anyway.
I look at it this way. Number one, if you offer to do it for free with no strings attached and you get pissed off because you didn't get any accounts out of it, then your heart wasn't in the right place when you started. You said you were going to do it free with no strings attached. That's the mindset you need to have. Anything else is a bonus. The other piece of it is if you do go into it with the right mindset of free with no strings attached and you don't get any business out of it, guess what? You just don't know how to present. I'm sorry. That's your problem. You didn't present that in a compelling enough way that this person could come to their own conclusion they needed to buy from you. Look, dude, when you go do a mod analysis, that is not a sales process. That is talking about mathematics to a business owner. That's it. I don't have to sell it. It sells itself. All I'm doing is making sure they understand the math and how it turns into negative dollars on their financial statement. I don't even have to ask for the order. I just simply lay it out and say, here's what Johnny Walker cost you for, his leg injury. And, now that he's back to work, finally, maybe we can figure out how to keep this from happening again. But unfortunately, over the next 3 years, you're going to pay $70,000 out of pocket because you didn't have controls in place. We ran into this with one of our clients and we were able to give them, the appropriate measures to train their team and have accountability measures in place so that they didn't have anything like this happen going forward. I hope that you're able to do something similar. I'm not going to ask them for the business. You don't have to. If you ask questions the right way, they will come to that decision on their own. I mean, Kyle, how many times you've been in how many appointments with me? Can you think of a single one
like
where
2 or 3?
Can you think of a single one where it was a hard close?
No, you don't even ask. It's just like you said, they come to the conclusion on their own because everything in front of them makes sense. They're like, okay, so how do we hire you? How do we move forward?
Right, and that's it. That's done. I mean, there's been probably a half dozen times in my entire career where I've had to dig my heels in and fight, but I'm at the point now where I'm not going to do that. If I go for that long, listen, I had a guy, this is one of my all-time favorites, and we've been going about an hour, so we'll wrap up after this, but I have a guy that is an HVAC contractor. I represent an extremely large number of HVAC contractors in Tampa. Like I've got some of the biggest, if not the biggest in town that are in my book of business. And I went into one and his mod was a 1.8. And this was a third meeting that I was with him because it was one of my producers that originated it. On the third meeting, we went full-blown mod master. I laid out everything, showed him $100 and some thousand that he could possibly recover because of errors, not just that he was overspending due to the mod. And after an hour of going through that and never talking about insurance, this guy looks at me and says, I want you to give me the top 5 reasons why I should hire your firm. I lost my mind. And I don't do that very often in an appointment. I said, with all due respect, I just spent the last hour giving you 100,000 reasons why you should hire my firm. You're kidding, right? And he said, no. He goes, I want to see how you answer the question. I want to know the top 5 reasons why I should hire your firm. I said, I'm going to give you one. I represent probably 40% of your competition, and that's market share as far as I'm concerned in Tampa. And those people are following our processes and doing the things they need to do, and they don't have 1.8 mods, so they have the ability to adjust their pricing down and capture more of your clients, and they're going to steal your employees because they can fund the benefits program because they're not pissing away their money on workers' comp. End of story. He said, well, that's a good reason.
that's only one. Now you got to give me 4 more.
Yeah, no, I didn't give him 4 more. And so, we haven't closed it yet. It comes up in another 6 weeks. But we'll see what happens. But I don't do well with that, man.
It's ridiculous.
Some of the times you get out there, and it goes back to what I've said time and time again. You just got to know when to walk away, man. I probably should have just got up, slapped my folio, and said, I'm not giving you anything else. I gave you an hour of my time, and it's the last hour you're going to get. Have a great day. And that's it. But you know what I did? I let revenue and premium cloud my head because it's probably 600, 700,000 in premium all in. So I didn't do that. Instead, I just got pissed off in the middle of the meeting and basically screamed at him about his competition and his lack of pricing controls. And we'll see what happens. But, you can't, again, it goes back to what did I miss, right? What didn't I articulate when I was talking that led him to ask that stupid question?
Well, he probably had it in his head the whole time that he was going to ask.
Yeah, I can't wait till he's done so I can ask him for 5 reasons. Oh, hey, guys, help me think of 4 more. I can only come up with 1.
But is that also a failure of our industry once again?
Yeah, it's what he's been trained.
It's rated every single year and everything else. And some days you're going to have to win on rate, but if you can also offer extreme value to somebody, like it's game changer.
Correct.
It's crazy, but
it is. It's crazy. It is crazy. Well, listen, man, we're going to wrap up. It's a beautiful weekend weather-wise here, at least until the tropical storms hit.
Yeah,
it's nice out right now. I'd like to go hit that yard one time and get it cut, and then are we going to be able to do
the same thing?
Are we going to be able to play golf in the morning or not?
Yeah. I mean, yeah, we can talk about that. There's been some developments.
Oh, okay, some developments. Can't wait to hear them.
Yeah.
All right, sounds good. Alex, tell them where to find you if they want to talk to you, man. I'm sure that there are plenty of people. I mean, you like to drink beer. You like to hang out with attorneys and accountants. I got to tell you, though, I don't know that I've ever seen this view. Whenever you talk to me, you must be at home in your home office area.
In my tiny little it's not a home office. We're in this. COVID's been a killer. We moved into. My wife is in nurse anesthetist school, and when she did, we were living about 45 miles outside of St. Louis proper. When she got into school, we decided to sell that house and move close to where the school is, and puts me pretty close to the office as well.
Also puts you pretty close to a college campus.
It's a tiny.
You've been known to hang out there once or twice after you graduated.
Oh, absolutely. Actually put me close to ballpark, everything else. Good spot. So the way the real estate market's been, we were wanting to buy a condo or buy a house near where she's going to school and couldn't find anything. Finally find this condo to rent, a little 720 square foot, 1-bedroom condo, 1 bed, 1 bath. We came from a 1,500 square foot brand new home into this 70-year-old condo. Well, it's all fine and dandy because I'm always going to be working and she's always going to be doing school stuff or be at the hospital doing clinical work. Well, then all of a sudden COVID hits and I'm working from home and she was out of clinicals for 7 weeks. And it's like we were getting ready to murder each other. It was like, you can't be in this little box.
Not enough space for that.
David's seen how terrible the lighting is inside of that place as well. And
my whole point in bringing that up was I am beyond disappointed that you don't have an Ozzie Smith or a Brett Hull jersey somewhere on that back wall.
I need to get that. I actually still have stuff that I got to hang up in this office. I got Alabama Gulf Coast, down in Orange Beach, Gulf Shores area, probably favorite place to vacation. And I got a huge picture of Busch Stadium back there. I do have those guys up there too.
Okay, I'll give you credit for that.
So, no,
tell them how to find you, man, and then I'm gonna let you go.
You can find me on Facebook, just Alex Toler, or you can shoot me an email, aptoler at Toler's with 1 L at DeWittINS.com. And I'll give my phone number, 314-527-2522.
I got to tell you, man, every time I type in AP Toler, I feel like I'm emailing an assistant principal, and it's not a good feeling in the pit of my stomach. I may or may not have had a run-in with an assistant principal or two back in the day. I'm sure Kyle never did.
No, great salespeople got in trouble at school, right?
100% of the time, you had to learn how to sell your way out of trouble, man.
Absolutely.
Well, listen, Alex, thanks for coming on, man. It's been great talking to you. Love hearing the experience. I know you're doing good things. I'm proud to be a part of it and can't wait to watch you just continue to build on the success you already have. Hope you have a great weekend, and we will catch you soon.
You guys as well. We'll see you.
You've been listening to the Power Producers Podcast. You can follow Killing Commercial Insurance on Facebook and YouTube. And if you want to take your game to the next level, check out our book, The Extra 2 Minutes, and our website, killingcommercial.com.